Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Standard disclaimer before we get started: nothing here is investing advice. Do your own due diligence. And today's guest is the president of the Uranium Producers of America, the executive vice president of Uranium Energy Corp, and the CEO of Uranium Royalty Corp, Mr. Scott Melbye. Welcome to the show.
Well, Jesse, thank you. It's a pleasure to be on with your viewers today and talk about uranium and to a commodity audience. So, pleasure to be here.
Yes, we're very happy to have you. We love uranium on this show. And I did want to get started, like I do with all my new guests, on their origin story. So how did you first discover uranium, and how did that path lead you to getting involved in the industry? I mean, you've got over 35 years of experience with a variety of companies. So what was that road that led you from there to where you are today?
Yeah, it's very interesting. And as we go into 2023, it's my 39th year in the uranium industry and nuclear energy more broadly. But I got into the industry right out of university in the mid-'80s, in 1984, where as a second-generation miner, my father's been engaged in mining his whole life. I was always intrigued by the resource industries, but I was not as inclined towards the geology, the engineering, the chemistry side of the business, and more fascinated by the business side, the finance, the marketing, the commodities trading aspect. And that's how I got my start in New York in 1984, trading uranium commodities for a German company, and then progressed from there, buying uranium for a nuclear power station in Arizona, and then shifting to the bulk of my career, which has been in the mining of uranium with three of the four largest uranium mining companies in the world. But more recently in an entrepreneurial phase of my career with Uranium Energy Corp and starting up Uranium Royalty Corp as the only royalty and streaming company in the uranium space. So it's been just a fascinating journey to see how nuclear energy has ebbed and flowed. Have seen the cycles in the uranium commodity market, but I have to say that with all that background experience, I've never been more optimistic about uranium as a commodity and nuclear energy as an energy source going forward. It's very exciting times.
It absolutely is, and let's touch on that, because there's been a lot of bullish news this year for those of us who've been paying attention to the uranium space. And I'd like to get your take on what you see as the main factors currently contributing to uranium and working in uranium's favor right now.
Well, sure. I think any commodity has to be judged by just the fundamentals of supply and demand and the kind of nuts and bolts analysis that we would have in any commodity. How much production, how much inventory, how much demand. And that itself has never been better as we sit today. But you have these mega trends, particularly the mega trend towards green energy. And I would say the very difficult, if not failed, transition society's made to a green energy and low carbon economy. Not that the objective is bad and we shouldn't strive for cleaner, greener energy, but the transition has really failed by relying too much on intermittent renewables and believing that wind and solar, which run 30% of the time, can be 100% of our energy. And at the same time, making it very hard on fossil fuels, and not until now embracing nuclear power. So we now see all these things in play. We see Germany in an energy crisis, Europe more broadly. We've seen localized energy situations in the United States, in California and Texas, South Australia, where it's not just an esoteric discussion. This isn't just a discussion about banning plastic bags or straws. It's really fundamental to our economic security, our way of life, and we're seeing that we got to get energy right, and that's really favoring nuclear power's carbon-free, safe and carbon-free aspects, as safe and carbon-free as wind and solar, but the fact that it runs 24/7, it's a baseload source of supply that doesn't emit greenhouse emissions, and so that's really the driver behind countries. States and countries and regions really turning to nuclear power in a way that I haven't seen since the 1970s, when we were in an energy embargo and dealing with the Arab oil crisis and seeing nuclear power grow then. But now I think you really have a different dynamic because you've got, in the past, uranium and nuclear power was always supported by the political right. In the United States, that would mean Republicans supported and Democrats opposed. We're now in a situation where Democrats in the United States Congress and even in the Biden administration are as favorable towards nuclear power as their counterparts on the Republican side. And that really is removing a lot of roadblocks to growth. And we're seeing that reflected now in growth in nuclear power around the world and certainly in the United States as well. But the second item that really is driving this is geopolitical. And the invasion of Ukraine by Russia, as appalling as that is, it's really caused people to wake up and really ask the question, where do I get my energy? Who am I relying on? Is energy independence more than just a buzzword? And we're really seeing that, Germany, again, is a great example. Having moved away from fossil fuels or intending to move away from fossil fuels and intending to move away from nuclear and rely on renewables has just resulted in them relying on Russian gas in light of everything that's going on and really compromised them in geopolitical affairs in Europe. It's caused their energy prices to skyrocket. Even before this year, they were 60% higher than neighboring nuclear France. And they've made no measurable reduction in carbon emissions, and their largest source of energy today are coal-fired power plants. So, again, the megatrend to clean energy has been important. The geopolitical threats and the energy independence issues all pointing to nuclear power. And that's all happening against a backdrop of the supply and demand fundamentals, where after Fukushima, we saw hits to demand. Plants were shutting down in places like Germany and were slow to restart in Japan. We've gone from that now to about 3 to 4% annual growth in nuclear generation globally. We've seen some 65 new nuclear power plants come online around the world in the last 9 years. We've seen another 55, 56 under construction. So demand is now increasing and increasing dramatically. But at the same time, because we had the low, real 10-year bear market in uranium, the prices were below the incentive price for miners to bring new mines into production and even continue to operate from existing mines. So we have a huge 50, 60, 70 million pound per year annual gap between consumption globally at 200 million pounds and production globally around 130, 140 million pounds annually. And so that has had a huge drawdown on secondary supplies and inventories. And we were just at a point where the market was pretty much coming back into balance. And not surprisingly, that speculators recognized this imbalance ahead of maybe the industry players, and companies like Sprott Physical Uranium Trust and others came in and bought up essentially all the remaining inventories and secondary supplies that were meeting the gap. So here we sit going into 2023. Demand is increasing at 4% a year. Production is still lagging dramatically. There haven't been incentives for new mines. So you have the classic supply squeeze. And as resource investors, these are the generational opportunities that we live for. And I really do honestly believe that we have that situation developing today. And it's not surprising. Uranium prices are up from $17 a pound in 2016 to now over $50 a pound in 2022, 190% increase, but we're still very much in the first inning of this commodity bull market. So it's my optimism is based on a lot of really good fundamental supply and demand reasons, but also some of those geopolitical and mega trends as well.
Excellent overview of the sector. I did want to touch on jurisdiction now, because that's obviously very important when it comes to the mining of uranium, but it's also important to investors to consider because you have different countries with different regulations, different levels of political risk, and all those sorts of things. So in your view, what are the best districts to mine uranium in? And as a uranium equities investor, is it important to be geographically diverse in your portfolio to kind of mitigate overall risk?
Yeah, well, it's a very timely discussion because of what's happened with Russia and Ukraine. it's really caused us to rethink where we get our energy supplies. And in the uranium industry, if I take the United States, it's amazing. We point out how Germany made huge mistakes in giving up their energy independence. But our nuclear energy industry in the United States, it supplies 20% of our electricity. We rely almost 60% on supplies of uranium from Russia, Kazakhstan, and Uzbekistan. And maybe, 5 years ago, this didn't seem like such a bad idea. We thought Russia was kind of joining the civilized world and going to be a global partner. That's all changed now, and we've seen them weaponize these energy resources in other industries as well. So it's now really cast a light on stable jurisdictions. And so one of the companies that I'm affiliated with, Uranium Energy Corp, we're focused on North America. We have mining operations in Texas and Wyoming, the two best jurisdictions in the U.S., and we're very much investing in Saskatchewan, Canada, which is in my mind, the Saudi Arabia of uranium with the rich deposits in the Athabasca Basin. We're there for that reason. We think geopolitically it will matter where you get uranium from. So I think that really favors producers in, say, Australia, the United States, Canada. I think Africa can fit in there, but you also have to kind of look at where China is controlling a number of those uranium mines and a lot of the resources in countries in Africa. And so I really do think it points to North America. If I was a uranium investor, more broadly in uranium equities, I would look for production facilities that are permitted, licensed, either restarts of existing mines or are fully permitted to go into production with all their permits in place. And so that narrows your search, because we didn't really have a huge period of incentive prices that have been encouraging mines to move forward in their plans over the last 10 years. So, Uranium Royalty Corp, my other hat that I wear, we're investing in those companies. We're out scouring the globe looking for the counterparties that have the geology, the management teams, the geopolitical risk for us to come alongside and invest in them in the form of royalties and streams to help them get into production. So it's very much top of mind for us where we invest, but it's also should be the same for uranium equity investors.
So I want to discuss the pricing of uranium a little bit, because it can be complicated for someone new to the space. You've got the spot market price, there's the futures market price, there's long-term contracting prices, which can vary contract to contract. Could you break all this down for us and let us know, is there one of these prices that your average investor should really be looking at who's investing in uranium?
Well, I know it's frustrating for resource investors because you're used to having very mature, established markets like copper or gold or silver, where you have, published prices on your Bloomberg screen. You can transact with the press of a button in a very efficient, established market like that. Uranium is very unique, where there is a futures market, but it's very small, very few contracts traded. So it really comes down to a transactional market between the market players and the utilities, the producers, traders, and intermediaries. And they are all engaging in the spot market, which is essentially buying uranium for a fixed price for delivery within 6 months. So that's the spot price of uranium. But most of the uranium transacted, particularly with the utilities, is under long-term contracts. So they may be 70% of their uranium is contracted directly with producers under long-term contracts, and 30% may be left for the spot market. But the spot market is much bigger than that 30%, because you have producers, traders, speculators all engaging in trades in that spot market. So the spot market price is important because it really shows you what you can buy a pound of uranium for today. It may or may not reflect what it costs to produce uranium or deliver it into a utility over the long term. That tends to be more of the long-term market, which would be a base escalated price, which a producer and a utility agree on transacting over a 5 to 10 year deal. Of course, that has some elements of hedging in it, and there are pros and cons to that. For utilities right now, it has a lot of attractiveness because everyone fundamentally believes uranium prices will increase and could increase dramatically from where we are today. Producers, though, on the other hand, may not want to cap that upside, but they may want the certainty of some of their production being placed into a long-term contract. So there's that interplay. So that price level of long-term contracts is important because it will give you an indication of how much incentive is being given producers to get either back into production or start up new mine production. Now, again, this is an interesting discussion because my Uranium Energy Corp hat, where we're a U.S. producer out of Texas and Wyoming, we choose to remain unhedged, and that's very unusual. It's more typical in gold or silver or those commodities, and we're very un-uranium-like in that position. But that gives investors in Uranium Energy Corp a very interesting thesis, is that we have near-term production which isn't committed or hedged away to counterparties in the coming years. It's all open for the upside as the market recovers. But both of those prices are important. Today's $50 pound price in the spot market is obviously better than where we've seen in recent years, but it's still not, I would say, at a level which is incentivizing a lot of new production. I think you still need to get closer to $60 a pound for the better mines around the world, and then even higher than that for most new mines, and particularly mines that require a lot of capital investment. So we have an interesting situation where demand is increasing dramatically. Prices haven't really reflected that yet. And so I think it's not surprising. Speculators are coming in and buying the physical commodity as an investment. And certainly as uranium equity investors, this is I say a generational entry point, given the thesis that we've kind of laid out here.
So there's various methods of mining uranium. You've got open pit, underground, in situ recovery. Could you give us a brief overview of these mining methods, and also maybe give us a kind of a pros and cons from a CEO perspective? Does when you're looking at a property to do a new royalty deal, does the type of mining method play a role in your final decision?
It does. I mean, I would say, just to kind of set the table, about 50% of uranium mining globally today is coming from in situ recovery, or ISR. And that's very different than, say, the traditional open pit or underground conventional mining methods. Both are obviously needed, and both play a big role in the uranium industry going forward. But ISR has made a huge inroad in recent years, I think, for two reasons. One, economics. ISR mines are less capital intensive to build these mines, lower operating costs to operate them. They may not be as big as some of the big conventional mines, but neither do they require $1 billion or $2 billion investment to build those mines. And that's been important because we're trying to get incremental supplies up and running and on the market. Our ISR mines in the United States with UEC, our total capital requirements for two mines to get them up into full operational status is under $70 million. That wouldn't even be the budget for tires in a conventional mine. So that's one reason. It's cost competitive. It's why Kazakhstan is kind of moved into the number one producer spot globally. But it's also going to be the basis as the Uranium Producers of America. I'm very bullish on American uranium, because we've really transformed from a largely conventional mining industry of the 1980s, of those lower grade deposits, which I think the cost curve changed and lowered globally. We needed to really turn to a more disruptive technology, which is ISR, to be able to compete with the Canadians and the Kazakhs with ISR mines. So I think you will see that mining method really be probably 90% of the uranium production in the United States will be under that. As a royalty investor, I'm just, I think I'm most interested in one, the likelihood of a mine to be able to be developed and go into production and cash flow and provide cash flows to our investors. I think the other thing that we, in this day and age, we look at is ESG and really just the health, safety, environment, social responsibility of our counterparties. We really do take that seriously and put all of our potential investments through that filter. And I think, again, it doesn't mean that conventional mines aren't environmentally friendly. It's just they are a more, intrusive way to drill, blast, mine ore from the earth than ISR, which is, I would say, very environmentally benign in terms of its impact and can be reclaimed quite quickly and thoroughly after operations are concluded. So that's the second, I think, advantage of ISR is that environmentally friendly nature of ISR mining really looks good in a world that pays attention to ESG.
So uranium's been very out of favor from Fukushima until recently, but we're now seeing a renaissance for nuclear energy. You brought up so many good points at the top of the show, talking about all the tailwinds currently in favor of nuclear energy. And you've also mentioned its early innings. So could you maybe talk to us about how you see that? Because some people feel the big gains have been made. They hear tales of Rick Rule, making an incredible amount of money on uranium stocks going to a penny and then bouncing back. So people think the big money's been made. Explain why you think we're still in the early innings here.
Well, and Rick, and a lot of uranium investors, frankly, made a fortune in the last bull market for uranium, where companies did go, really were 10 baggers in that rise from $10 a pound uranium to $137 a pound uranium. I think a lot of those same elements are present today, but a lot of those fundamentals are more positive today than they were in the last bull market. I mentioned one already was the acceptance of nuclear power amongst the left and the right is something new this go around. So I think we could be surprised at how fast nuclear power grows, particularly small modular and advanced reactors that are now becoming such a big issue. I think, early stages we're at $50 a pound. I think it's still $10 below what would be the incentive price for the more competitive mines globally. If we went to $137 a pound in the last bull cycle, and now we have a much stronger narrative around nuclear energy and nuclear power growth. And we have quite a deficit. I mean, we have that 50 to 70 million pound per year production gap that we've been in for the last 8 years. So even if we weren't building any new plants, we just had the ones that we currently have, we have to make up that gap with new mines. But now you have to layer on top of that demand from new reactors, whether they're the big reactors that are being built, several a year going up in places like China, India, elsewhere, or the SMRs, which are now seen being advanced in the United States, the UK, Canada, and elsewhere. So definitely not, uranium investors haven't missed the boat on this cycle, but I do encourage people, I don't know, if they're waiting, I'm not sure what they're waiting for at this stage. And I realize in the past, we always encouraged uranium investors, be patient. This isn't, going to happen overnight. And that was good advice because it obviously didn't. But now I think you see that the fundamentals are coming together where I don't think you have to wait 5 years for the returns that you should get. I mean, I think 2023 will be an incredible year for uranium, both uranium prices, uranium equities, and growth in nuclear power plants. So it definitely is an exciting entry point. If people haven't gotten in yet, if you've been a patient, long-standing uranium investor, I think the patience is finally going to be rewarded. I know it's been a 10-year bear market in any commodity, is pretty tough to stomach. And so I think either one of those uranium investors, new or existing, going to be pleased with what 2023 brings.
So let's pivot now to Uranium Royalty Corp. For those unfamiliar with the royalty and streaming model and how that works, could you break that down for us?
Yeah, well, the royalty and streaming model in the resource industry is not something new, but I would say it's something that has evolved in the last 10 to 15 years. And your investors are probably most familiar with companies like Franco-Nevada, Wheaton Precious Metals, Sandstorm, Royal Gold. This has developed into a multi-billion-dollar industry, and for good reason. I think for investors, it's a way to have pure play commodity exposure, but still have the benefit of a diversified portfolio of investments within that royalty company. For miners and developers, it's become, it used to be kind of thought of as alternative finance next to debt or equity to develop and bring on a new mine. It's now become mainstream financing. So the notion is quite simple. A company like ours would provide development capital to a miner or developer to complete or restart or expand a mine in exchange for a royalty, a financial interest on future production, or a physical interest, a portion of the mineral output. We're the first, though, to really have taken this to the uranium industry, and it was just remarkable to some of the early founders of Uranium Royalty, and Rick Rule was included in that, where we kind of looked at, we couldn't believe that our industry didn't have a Franco-Nevada. So we just took that proven model and brought it to uranium, and good timing, because we do have a cycle now that's emerging where there will require a lot of capital being invested in mine developments in Africa, Australia, United States, Canada, all around the world. And it really hasn't been incentivized. So we realize that there'll be a place for equity, there'll be a place for debt, but we are kind of that non-dilutive, non-constraining. I mean, debt is another way to finance a mine, but the covenants and requirements that banks would put on you, not to mention interest rates today, are not as attractive than what we can offer through a royalty and stream. So it's not surprising it's become a big resource investors target these days. They love the returns that they get on these, and it is a diversified investment. Today, Uranium Royalty Corp, very young company, we just listed on the NASDAQ exchange a year and a half ago, Toronto Stock Exchange 3.5 years ago. But we have 15 royalties in our portfolio, and the intention is just to grow those that portfolio of royalties. We have a ways to get to be the size of Franco-Nevada, but we're going to work every day trying to identify who are those counterparties that have the right combination of resources, geology, mine plans, geopolitical risk, management teams to include in our portfolio. So investors really benefit from our 30 years, 40 years of experience in uranium to go out and kind of do that due diligence and identify those counterparties that we put into the portfolio. So it's very different than the Uranium Energy Corp model, which is representative of a typical company that we would invest in, that has those near-term assets, management teams, but is a pure play mining and development company. So both are pure play, but both very different risk-return propositions.
So with Uranium Royalty Corp, maybe you could give us a breakdown of some of the main royalties that you have and why you're bullish on them.
Yeah, so one of the first things to remember is, unlike copper or gold or other commodities, we've been an industry that's been encouraging mines to not be in production, to either delay development or shut in production to rebalance the market. So we kind of came in at a very interesting contrarian time. So one of the features that we started out with was to make significant investments in physical uranium. Physical uranium, when we founded the company, was trading close to $20 a pound, way below the incentive production cost of mines around the world. So we made investments in Yellowcake PLC, which is a commodity ETF out of London, an almost 10% interest holding in that company. Came with it some purchase rights that they have with Kazatomprom, the world's largest producer. But then we followed up with open market purchases. We purchased almost 1.6 million pounds of uranium in the open market at a cost basis of in the low 40s. So, that was kind of an initial step to reward those early investors with uranium priced at well below the global production cost. But then we, upon IPO, we did crystallize a number of royalties. Some of the ones that are nearer term cash flowing or in production or nearing production would be the Langer Heinrich mine in Namibia, which is the Paladin mine, which is going through a very significant process to lower their production costs, relooking at the mine plan, the processing circuit, and are emerging in 2023 in a ramp up of their production to be in a very competitive global supplier of uranium. And they're very established as it is, having produced several million pounds of uranium since they started up. That was one of Rick Rule's big winners in that last bull market, was his investment in Paladin. But we also very proud to have interest in the world's two richest mines in Cigar Lake and McArthur River in Saskatchewan, where we were able to acquire those royalty interests from an early explorer and developer in the 1980s in the Athabasca Basin who retained this interest. So it'd be very hard to get that royalty interest from Orano or Cameco, the operators today, but because we were able to acquire that in the secondary market from that early explorer, we're able to have interest in those world-class mines, of which McArthur River is just restarting production this quarter, and Cigar Lake has been in production off and on. It was impacted by COVID more than market conditions in the last 3 or 4 years, but it's really thrilled to have those two mines in the portfolio. Also in the United States, we increased our holdings, our interests in the Lance mine, ISR mine in northeastern Wyoming, Peninsula Strata Energy operating that mine, and we're very happy to increase our interest there. Generally speaking, we love U.S. ISR, so we would look to make additional investments in ISR mining in the U.S. So we're off to a good start for a young company with a good inaugural portfolio, but the real focus is growth. So look for us to add portfolio holdings in the coming days, months, and years.
So we're reaching the end here of 2022. Maybe a look back on this year for Uranium Royalty Corp. What goals did you set? How do you think you did at achieving them? And then maybe speak about any upcoming news flow investors should be looking forward to coming up ahead.
Yeah, we last year was 2021 was a great year where we added the McArthur Cigar royalties. We added a streaming offtake arrangement with CGN, the operators of the Husab mine out of Namibia, and increased the holdings at Lance. And so going into this year, our focus has really been expanding the portfolio and engaging with counterparties. And it's really helped now for travel to reopen. Simple things, just to be able to get on a plane and go visit with mine developers in their home country and take a look at things has really kind of been a good development for us to get back on the road. But we have quite an active pipeline. I think we will have some announcements here in the very near term of additional royalties and interest being added to the portfolio. Of course, the restart of McArthur River is important to us because we will start to get royalty payments. We also have the right to take our royalty payments in kind as uranium, physical uranium, and we would look to make that election as well very shortly here. So, again, looking for those transformational deals that will really add to both the near-term cash flows and expand our geographic horizon. We really want to be present in every uranium district globally. So far, we're heavily weighted towards the U.S., Canada, and a little bit in Namibia, Africa. We'd really like to expand in Africa, in Australia, and elsewhere.
Great. Well, thank you so much for joining us today and sharing all that knowledge on the uranium sector. We'll definitely put a link below to the Uranium Royalty Corp website. Is there anywhere else people should go if they want to hear more from you or learn more about either UEC or URC?
Yeah, well, URC is uraniumroyalty.com. Uranium Energy Corp is uraniumenergy.com. URC is traded on the NASDAQ as UROY. We rang the closing bell on the NASDAQ 2 weeks ago, which was an exciting thrill to be on Broadway and be able to talk about uranium and nuclear energy at the NASDAQ 2 weeks ago. UEC is traded on the NYSE and is one of the most liquid names, trading almost 10 million shares on the New York Stock Exchange. So these are two excellent pure play investments in the uranium and nuclear energy story. So I would encourage you to go to those websites where you can see our corporate presentations and learn more about what we're doing at both of these companies.
Well, it was great having you on, Scott, and hope to have you on again in the future to continue the conversation.
Great. Thank you, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.